Hello, everyone. Thank you so much for joining us for another weekly wrap up. My name is Jeremy Cronemeyer, Operations Manager for Wickham Financial Group. And I'm Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what's going on in the markets?
Yeah, thank you, Jeremy, and thanks for our listeners jumping on another call. Yeah, we saw U.S. equity indices finish pretty mixed with some volatility on this holiday shortened week. So early in the week, we saw about a 2% drop, but it was mostly recovered by the S&P, Nasdaq, and the Russell 2000. We saw investors' preference shift towards non-U.S. assets as the U.S. dollar saw its worst weekly drop since June. Gold surged 8% to over $4,900. Silver jumped 14%, breaking that $100 mark for the first time. And we saw U.S. Treasuries sell off, pushing the 10-year yield to about 4.3, a 5-month high before kind of retreating a bit. If we look at sectors and some company highlights, we saw energy gaining about 3%. We saw rate-sensitive sectors like financials, utilities, and real estate fall over 2%. And Intel, company-specific here, that plunged about 17% after reported quarterly losses and some weak guidance. If we look at some economic data that came out, US-based, we saw the long-delayed November core PCE rose about 2.8% year over year. And the CPI data suggested that December's core PCE out February 20th may rise to about 3.1 year over year. Business activity still expanding. S&P Global Flash Composite PMI that came in about 52.7. Job growth stagnating with higher input costs lifting and selling prices elevating. We saw consumer sentiment that rose to about 56 and a half. That was a 5-month high, but still 20% below last year's numbers. We saw the 1-year inflation expectations tick down slightly to about 4%. Now, internationally, we saw the Bank of Japan held rates about 3/4 of a point, maintaining their hawkish forecast. China met its 5% GDP growth target. Over in the Eurozone, business activity was pretty steady at about 51 and a half. And UK inflation, that rose to about 3.4 year over year. Now, the week ahead, geopolitics is always going to play a role. What's going on with the Sell America trade, ongoing discussions between the U.S. and negotiations with NATO in terms of Greenland. I'm sure that will be interesting to see how that unfolds. But we really have the Federal Reserve. They're coming out expected to hold interest rates pretty steady in their policy meeting coming out Wednesday. And the markets being focused with some questions surrounding the Fed's independence with the new Fed chairman to be announced here shortly. We look at corporate earnings. We got some really big tech giants coming on board. We got Apple, Meta, Microsoft, Tesla. Then we got UPS, Boeing, Chevron. Really the key theme is going to be progress. What is that return on the investments that these large tech companies are making in the AI related investments? You know, are we seeing some profitability? Are we seeing an increase in productivity because of those investments? Now, on the U.S. economic data, we'll get consumer confidence, durable goods, factory orders, Producer Price Index, that's the PPI, will be coming out. And then internationally with their banks and data, we'll see the Bank of Canada expected to keep rates unchanged. We'll see Europe's Friday. They'll come out with a first estimate of Q4 GDP, and then there's December CPI numbers. And then Japan and Australia, they'll have their inflation updates. They're scheduled to come out as well. Jeremy?
Gotcha. Well, Graham, I had a question. You mentioned the Fed meeting tomorrow. How do you see that going, and what do you see the markets maybe how they're reacting to what happens tomorrow?
Well, I going back to the previous statement, I think they're going to be looking for cues of independence. I think they're going to be looking for the next rate cuts. Is that going to be at this meeting? I don't think we are expecting it to be at this meeting, so it might be more of the June. And then how many? Has the market kind of priced in too many rate cuts? Is the economy picking up steam, or is it still moderating a bit? That's kind of what this market's going to look for from the Fed. Are they going to get all their answers? I don't think so, because the Fed usually holds this stuff pretty tight to the vest. But I think the
Right.
market's going to be looking for cues on the next steps that the Fed will take in terms of possibly lowering rates.
Gotcha. Well, Graham, we always appreciate
Yeah.
the information and expertise, and thank you to our listeners checking in with us every single week. And we do have our retirement planning today classes starting tonight. But if you haven't signed up, or you know somebody that might would want to, we still have some seats available for this Saturday, for the next 2 Saturdays. So check out our website or give us a call here at the office. We'd be glad to help you with that. And we look forward to seeing you next week.
Take care.